So you have money, maybe it's a little, maybe it's a lot. Either way, it's yours to grow, protect, and use wisely. What do you do with it? How do you make it work for you, instead of just sitting there? In the world of money, Warren Buffett is the master. He's the name everyone knows, the investor even other investors listen to. For 60 years, he's led Berkshire Hathaway, turning it into a financial powerhouse and a symbol of smart investing. Why do we hang on his every word? Because of the numbers. The results speak for themselves. Berkshire has delivered nearly 20% annual gains since 1965, a record that's almost impossible to match. The S&P 500, just over 10%. That's still good, but it's not Buffett good. That difference becomes a Grand Canyon of growth over 6 decades, a gap that's almost hard to believe. We're talking over 5 million% gain. That's not a typo, it's the power of compounding, patience, and discipline. It's real, a result of a simple yet brilliant philosophy. No magic tricks, just timeless principles. When Buffett speaks, it's like getting a peek at the secret recipe for success. He doesn't chase fads or get swept up in hype. He invests in solid, understandable businesses, companies that make things people need and use every day. In a fast-paced world, his patient wisdom is rare and beautiful. He reminds us that slow and steady can still win the race. As he prepares to retire in 2025, he's giving us one last look at his playbook, a final chance to learn from a living legend. It's a moment in history, like the final episode of your favorite show. Everyone wants to see how it ends. So let's dive into the latest secrets from the man who turned patience into fortune. There's still so much to learn. What's on his mind? What has caught his eye? The answer is as fascinating as the man himself, and it could change the way you think about money. Let's pull up a chair and get comfortable. This is a story worth hearing. The master is preparing to take his final bow, but his lessons will echo for generations. It's a real moment in history, and we're lucky enough to witness it. Every great story has a passing of the torch. It's a moment that marks both an ending and a new beginning, filled with anticipation and hope for what's next. At Berkshire Hathaway, Warren Buffett is stepping aside for Greg Abel, a transition that's been carefully planned for years. Abel, not a flashy newcomer, has been running Berkshire's non-insurance businesses for years, quietly building trust and respect within the company. He's been in the engine room, ensuring everything runs smoothly while learning from Buffett, absorbing the nuances of Berkshire's unique approach. This choice signals continuity. The core philosophy remains, even if the quarterback changes. The playbook, built over decades, is still in use. Abel has been involved in big investment decisions, absorbing wisdom and adding his perspective, shaping the company's future with every move. It's a mentorship of epic proportions, like learning painting from Picasso. Few get to study so closely under a legend. Abel understands Berkshire's culture of trust, autonomy, and long-term thinking, values that have shaped its identity and success. He's here to be a steward, a guardian of this incredible legacy, ready to guide the company through the next chapter. As we look at Berkshire's latest moves, we're seeing the first glimpse of the Greg Abel era, a time of both stability and subtle evolution. It's a collaboration, a fusion of experience and new energy, where tradition meets innovation. The company is built to last beyond any single individual. Its foundation is strong, its vision clear, the kingdom is secure, the strategy is set, and the path forward is mapped out with care. The future is in steady hands, just as Buffett would want it. With Abel at the helm, Berkshire's story continues, ready for its next great chapter. Let's get to the juicy part. In a world obsessed with the next big thing in artificial intelligence, you might expect the smartest investors to be chasing the latest software or the flashiest AI startups. But sometimes, the real story is hiding in plain sight. Berkshire Hathaway's big secret? Steel. Not the kind of headline you see every day, but that's exactly what makes it so interesting. Not a flashy tech company, but Nucor, a major steel manufacturer. This is a company that's been quietly powering America's growth for decades. Steel, in 2025? It's like finding out the hottest new band plays the harpsichord. It's unexpected, almost quirky, but it makes you look twice. But that's the genius of it. While others chase AI, Buffett and Abel look at what AI needs. They're not just thinking about the software, but the skeleton that holds it all up. It's a classic picks and shovels play. During the gold rush, those selling picks and shovels made fortunes. The lesson? Sometimes the surest bet is on the tools, not the treasure hunters. AI needs data centers, power grids, and robots, all made of steel. Every server farm, every robot arm, every mile of new infrastructure starts with steel. Nucor is forging the backbone of the AI revolution. Without steel, the digital world would have nowhere to live. It's a stealth AI play, a bet on the foundation of the technological future. While others look up, Buffett looks down, to the ground floor. This isn't just an investment in metal, it's in the physical reality of digital dreams. Every byte of data, every AI breakthrough, needs a home built from steel. Nucor's stock is up over 31%, paying dividends for holding on. It's proof that sometimes the old economy can fuel the new one. It's a company with a solid foundation and a crucial role in the technological shift. Nucor is building the bridges, literally and figuratively, to the future. It's so simple, so logical, it's almost poetic. The most advanced technology still needs something solid to stand on. It's a classic Buffett move. He's always found value where others overlook it. Investing in Nucor is a bet on rebuilding and upgrading America. It's about more than profits. It's about progress. It's a vote of confidence in American industry. In a world of code, steel still matters. Progress requires both brains and brawn, software and steel. The future is built by those who understand both. It's a powerful reminder of the enduring need for foundational materials. In the race for tomorrow, don't forget what holds it all together. Let's dig deeper into this picks and shovels strategy. Imagine a music festival. Instead of betting on a band, invest in the company providing stages and electricity. That's what Berkshire is doing with Nucor. The AI revolution is that festival, creating enormous wealth. Companies spend billions on infrastructure like Project Stargate, a supercomputer city needing a steel skeleton. Every data center, manufacturing plant, and power grid upgrade screams for steel. This is about more than data centers. Think electric vehicles, renewable energy, and infrastructure modernization. The common ingredient? Steel. By investing in Nucor, Berkshire bets on America's rebuilding and innovation. It's a tangible way to participate in a future that feels abstract and digital. Buffett's investment in a domestic steel giant fits his worldview perfectly. It's a statement of belief in America's capacity for innovation. Let's take a trip across the Pacific. Berkshire is building a massive position in Japan's Sogo Shosha. These are giant trading houses: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. Buffett is a huge fan, investing nearly $29 billion. Sogo Shosha do everything: energy, metals, infrastructure, food, textiles. They are the circulatory system of the Japanese economy. Buffett started buying in 2019, seeing value where others didn't. Japanese stocks weren't fashionable, but Buffett saw durable businesses at reasonable prices. These companies are essential to their economy, with proven business models. Since investing, they've performed wonderfully. Buffett admires these firms and their management. Japanese regulations might relax, allowing larger stakes. It's a long-term partnership getting stronger. Buffett's philosophy applies globally, from Omaha to Tokyo. What captivates Buffett about these Japanese trading houses? They resemble a smaller Berkshire Hathaway: diversified businesses, cash generation, and owner-like managers. It's a business model Buffett knows well. First, dividends. Buffett loves dividends, cash payments to shareholders. Japanese firms provide strong, reliable dividends, creating a wealth cycle. It's not about getting rich quick, it's about getting rich for sure. Second, stock buybacks. They reduce shares, making remaining ones more valuable. Executive compensation is sensible, focusing on shareholder value. This alignment of interests is music to Buffett's ears. Finally, diversification. These companies are resilient. If one sector struggles, another thrives. Diversification smooths out bumps, providing stability. It's attractive to an investor who follows rule number 1, never lose money. Sogo Shosha are financial fortresses. Buffett has happily bought a significant stake in 5 of them. Let's talk railroads. Berkshire owns BNSF, a huge, essential business. A big merger was announced between Union Pacific and Norfolk Southern. Would Buffett buy another railroad like CSX? Nope. Instead of a costly bidding war, Buffett and Abel announced a partnership. BNSF and CSX would create a seamless rail network. It's teamwork, not a takeover. This move shows Buffett's mindset. Why pay a fortune when a partnership offers benefits? Partnerships improve operations without the price tag of an acquisition. It's about creating value through synergy, not ownership. This preference for partnership over purchase is key for Berkshire in 2025. Buffett and Abel are happy to wait for the perfect pitch. If it doesn't come, they find clever ways to create value. Sometimes the best deal is the one you don't make. Not every Berkshire investment is a home run. Charter Communications is in a slump. The stock has fallen over 20% this year. Charter faces serious headwinds, with slow growth and intense competition. Customers have more choices for internet and shows. The competitive moat is narrowing. Charter doesn't pay a dividend, making it less appealing. Berkshire's position isn't huge, but the thesis might not be playing out. The landscape is changing faster than anticipated. When a company's story changes, a smart investor must adapt. Buffett's philosophy: own a stock forever if the business remains wonderful. If fundamentals decay, it's time to sell. It's like tending a garden: pull the weeds for healthy plants. Charter's poor performance makes it a candidate for pruning. After this whirlwind tour, what's the big takeaway? Buffett's secret is simple. Focus on owning wonderful, durable businesses. Don't chase hype or get swept up in mania. Look for quality, stability, and a fair price. It's a strategy of patience, discipline, and common sense. The investment in Nucor isn't a bet on a single AI company, it's on the infrastructure. Japanese Sogo Shosha aren't about quick stock pops. They're stable, cash-rich partners. Partnering with CSX shows discipline to walk away when the price isn't right. Buffett reminds us of the power of what's timeless: strong brands, competitive advantages, honest management, and long-term value. He's not predicting the future, he's investing in businesses that can handle it. It's a defensive strategy with incredible offensive results. As Greg Abel takes the reins, this is the legacy he inherits. Investing can be simple, rational, and enjoyable. Buffett's final priceless secret: focus on certainty, not speculation.